Okay, so very good morning. Welcome to the briefing for Tuesday, the 6th of December. I guess kind of taking a look at and review of what happened yesterday, because it was an awfully surprising day in terms of reaction that probably most of the market was expecting, given the result of the Italian referendum, the resignation of Renzi. For one, looking at the euro, I mean, after we gapped lower, which made more, I guess, logical sense when we reopened in electronic trade, we touched lows near that 105, never managed to break it. And then really as Europe came in, that's when the aggressive price movement occurred, targeting the closing of that gap up towards pivot yesterday. And then it just powered on. Even after we left, the US carried it even higher, all the way up to finding some resistance psychologically around the 108 handle. But, we're talking about a move from 105 to 108. Obviously, looking in hindsight now, people commenting, looking at the fact that, the polls were indicating that a no vote would triumph, albeit the margin was wider than most people had expected. But it seems to be the market is just giving Italy the benefit of the doubt to some respect, in regards to the fact that there's still a bit of time to really piece together a government. And maybe just the fact that Italy as well is somewhat desensitized to changing of the political guard, given that this is now the 64th government in the last 70 years. So certainly now that 108 will be a line to keep an eye on the upside, and then probably as well pivot downside for this newly formed range, given the cluster of price action that we had yesterday around that 107 handle, which is where pivot is sitting just below. A couple of things actually talking about this. Obviously there was one of our live guys, Thomas, that I was showing yesterday, an excellent trade that he had from, I think it was R1 to R2, where he carried that price action. It was good for several reasons. One, because he had made a losing trade in the morning, but that didn't stop him psychologically from wanting to enter that trade when it emerged. His timing was excellent. He was also, again, the confidence to go in with multiple contracts and then scaling out at previous highs to then holding one to eventual target. One of the things as well, like Pierce was at Lovett Lane yesterday with the month ones, and we just had a quick chat about how did the guys get on here and then how did the guys get on month one. And actually the month ones performed very well. It was if almost the month ones looked at the price action and just traded it accordingly. The month threes, however, were trying to make heads or tails of what the hell is going on, and actually their judgment was clouded by their logical reasoning of the market is not behaving, it's doing the opposite, in fact, of what it should be doing. Now again, the good thing was that I know, for one, that Thomas does have a strong fundamental grasp of the principles that drive the market, and he has a view. And that trade that he executed very well was against his view. The point being that the benefit of almost the month ones being, let's say, more fundamentally naive to maybe some of the economic finer points and details, is that they just traded what was in front of them. And as such then, that actually meant they were able to take advantage of some of these moves without hesitation, which obviously is one of the biggest things when executing. Likewise, the DAX. We dropped those Italian banks yesterday. They were down at the open 5%. I think the selling lasted the whole amount of 2 minutes before then we started rallying. Although the Italian banks did underperform, obviously this DAX price action at the time was a bit of a steam train. It was just through R1, R2 very quickly on cash open. If you look at it, actually these are half an hour candlesticks. So it was that first half an hour of cash equity trade, which actually was the entire almost rally for the day. Just taking a look where we're sitting at the moment, just a slight negative on the day. And certainly I would be keeping an eye still on these Italian banks, because we did talk about yesterday the recapitalization fears is probably the next now hurdle in the short term. We're going to discuss Paschi in a moment. But looking at other things that have occurred this morning that may also have helped just some of the sentiment, although equities are slightly lower, albeit we're still holding on to that impressive run higher yesterday in the DAX and the S&P, which followed in sympathy. The dollar's weaker again, down just over 1/10, so both pairs on the front foot. But we have had some German data this morning. We've probably clocked that already in the press. But this is looking at a 2-year chart or 4-year chart, and you can see German factory orders this morning rose 4.9% month on month in October of 2016. That was against a market consensus of 0.6. It's the fastest growth since July of 2014, driven by strong domestic demand and foreign orders. It's a very, very healthy reading there coming out of the German economic data, and as the print says, the highest since July of 2014. So likely that's probably also just helping a little bit this morning, maybe some of the euro push, and helping keep equities elevated, albeit slightly negative on the session thus far. But as I said, definitely I'd be keeping an ear to the ground in regards to just monitoring Italian bank performance. Latest being Monte Paschi is kind of the one which you read about the most, although UniCredit actually has to raise the most amount of capital. I think it's around 13-14 billion euros. Their shares were under pressure yesterday, but Paschi is the one that's kind of seen as the one most in need of help. And the latest in the FT this morning is that bankers are running out of private sector solutions, i.e., I guess from a private sector perspective, you're unlikely to be willing to park your cash there given the political uncertainty for sure. And so I've told Italian lender to prepare for a state bailout this weekend. So that's something to keep an eye on, because if we start looking at the Monte Paschi di Siena default probabilities against mapping their share price, so their risk of default is pretty much as elevated as it was when we had that big run on Italian banking sector back in mid-September. You can see the phenomenal volatility in their share price. We were trading in early October at 17 euros. We rallied to 45 euros. Now we're back to 18 euros. This is only in the last 3 months. And then the chance of the bank defaulting, which I think is unlikely, given the fact that how probably systemic they are just in the makeup of the Italian banking system, likelihood of bailout would be facilitated if push comes to shove. So we'll be looking at for that for the at the weekend. Other things though to look at is sterling. Obviously, in terms of cable, that was another solid day yesterday. We're getting very close to those key or critical area of that 128.06, that post-Brexit high that we had, which kind of defined that move after the big sell-off in June. And now that we've managed to get over that 127 line, which you can see was acting as some brief support here and then resistance likewise, that's psychologically quite important. Now, one of the big things which might cause a catalyst here at this specific point in time on whether we can get above 28.06, break that level and open up a move back towards more 130, or a reversal back down to more 125 and below, is contingent on the UK Supreme Court hearing which is going on today. So the government had their day yesterday putting forward their case that the government should have the right in order to call the shots on triggering of Article 50 and Brexit negotiations. I believe the government are still, it's their turn again today, before then the other side of the case is heard over Wednesday, and Thursday afternoon, that's late afternoon, is when it's going to conclude. So the decision on that, I would say one of the main reasons which has been supporting this recent rally in cable has been the fact that actually you had that UK High Court ruling go against the government, i.e. softening the terms likely to come in negotiations with Europe, and that's been a net positive for sterling. The way that this pair is positioned now is definitely for the UK Supreme Court to ratify what the UK High Court said. Anything less than that, I would say, then definitely that move from 25 to 27.5 needs to be taken back, for sure. And then if you look at it, pricing point-wise, this is exactly when that hard Brexit comment was coined by Theresa May on that weekend of the Tory conference. Is exactly pretty much where we're trading. So in the interim period, obviously I'd be keeping a close eye on any tests on that 128.06. That's going to be a big level for the market. But possibility that whether we break that level or see a more dramatic move, which would be a reversal of recent day and week's price action, would be if the unexpected happens. Because don't forget, the consensus is the Supreme Court highly unlikely to go against what the UK High Court has already ruled, which is that parliamentary officials need to have a say in these talks. So definitely keep an eye on any news flow related to that matter. I think we put it on the TV for about half an hour yesterday, and I think it actually knocked out most of the guys and put them to sleep in about 5 seconds. So it's not the most exciting thing ever in the world, and I certainly wouldn't be expecting really too much at this point. But come, I would say, late Wednesday afternoon, going into Thursday, you might start to get some murmurs coming out from various journalists following the event live. So I would be keeping an eye on some of the national press, journalist commentary and Twitter to try and capture any kind of rumours surrounding what the end verdict might be. Quick look then at the session for today and what to look out for. You've already had the RBA rate decision. As the FT kind of deemed it, it was into the meeting, hold rates, repeat the statement, back to the beach in terms of the RBA rate decision. So really nothing too interesting going on there. German factory orders, as discussed, was particularly strong this morning. And then moving through, there's really not too much going on. Eurozone GDP is really an afterthought because this is final reading of Q3. And then looking into the US session, a couple of things potentially of interest. You've got trade balance, factory orders, IBD tip, economic optimism, and then the API crude oil inventories, which would be aftermarket as per usual. A quick look at those headline readings. In terms of the trade balance reading, the previous one showed a deficit of 36.44 billion in September, slightly lower than market expectations, was the lowest trade gap, as you can see, since February of 2015. Looking at the factory order situation in the States, that's been fairly consistent the last two readings, the third consecutive month of increase. I would say that just generally speaking, US data has been robust enough that the market is very assured of the December hike. And then actually reading Deutsche Bank note this morning, which is kind of just giving an overview of what to expect from the Fed meeting on the 14th, it actually could be not that exciting, given the fact that the dot plot projections actually for 2017 that already exist are fairly accurate. It's the 2016 one that's been inaccurate from a Fed forecasting point of view. So actually even the dot plot matrix might only see minimal revisions. So really it's probably going to be more the press conference of Yellen that will hold a bit more potential market volatility. Speaker-wise now, don't forget as well, we're into the blackout period now of the Fed. You had that kind of run of Fed speak, a couple of Fed officials yesterday, but nothing really too groundbreaking there. So overall, I would say just keep an eye on the sterling currency here. We are within sight, kind of 35 pips or so of that 128 handle and looming that 06 above, which is key. Any murmurs about the the Supreme Court rulings would be vital in order to encapsulate any headline volatility you might get on that. Upside 108, yesterday's high in euro, and then the DAX will just be interesting. We've obviously had a big move yesterday. We've held on to that. I would say, looking on a longer term basis, I mean, this only puts us back towards really the levels that were seen kind of mid last week. But I'd just be interested to see if we get anywhere near the lower bound of that range that held up yesterday. So talking around the kind of 10,630 type lows. If the Italian banks remain under pressure, then it'll be interesting to see whether this sentiment read of positivity yesterday can be maintained. So maybe any test of those ranged lows there could then prompt, you've got pivots sitting just beneath. Any break of that, then potentially a bit of a pullback on that move. But again, I would say just keep an eye on the trend. The market's still digesting and making sense of the Italian situation. So as was the theme yesterday, just play it accordingly. Okay, going to leave it at that. So enjoy the session. We'll be in the chat rooms as per normal. So have a good day. Thanks, guys.